Friends, we will continue with the topic of profits and gains from business and profession. Let me take to the aspect of to the certain specific domestic transactions. Now they want to bring the similar provisions as are there in the transfer pricing. See, for those who are preparing for the IPCC, let me tell you in brief what is this transfer pricing concept. See, it is not that earlier you don't have the transfer pricing concept for the domestic transaction. Earlier also we have. Like, normally what will happen when transaction takes place between the related parties? There is always a chance of that a transaction may be carried out either at a price more than the market value or a price less than the market value. Consequently, there is always a chance of profit being either shown less or more. So, to prevent such kind of situations, earlier they thought it that such a regulation is required more in the international transactions. The possibility of shifting the Indian profit to the foreign country, thereby avoiding the tax in India, is a more. So they have brought strict provisions with respect to the international transactions. Of course, in India also, that is with respect to the domestic transactions also, we have a section 40A2 which says that in case if the transaction is with a related party and if transaction is done at a price which is unreasonable and excessive, then naturally the assessing officer can disallow to the extent that the amount represents unreasonable and excessive. That is to say, let us suppose I am running a academy for CS students. Every year my Xerox expense will be about 4 lakhs. How come it is a 4 lakhs? Because the payment that I am making to the Xerox person, who is not a related person, is 4 lakhs. For every copy I pay 35 NP. Now suddenly one day my brother came and said, I am going to give you or provide you service of that Xerox. Now I am paying, let us suppose, 50 NP per copy. As a result of that, my total expense earlier what used to be 4 lakhs, today it has gone to 7 lakhs. Just because he is my brother, I am paying more than the reasonable amount. So to that extent, disallowance is always possible and prescribed in 40A2 also. So related party transactions will be under the scanner of the assessing officer, and in case if he feels that it is unreasonable and excessive, naturally he used to disallow it. Now when you have already 40A2, what is the requirement for bringing this particular provision? See, year after year, even today also, finance minister is going to present the finance budget 2013, finance bill 2013 in the parliament. Yesterday economic survey says the growth cannot be more than 5 to 6% and you should not increase the tax rates. Only thing that you have to do is enlarge the tax base. Enlarge the tax base means what? Identify those transactions which otherwise need to be brought under the tax net. If they are getting escaped from the tax net, you bring it into the tax net. That's why it is expected today that there will not be much of changes in the law, except that effort will be made to identify new areas and new people, how to bring them into the tax net. Here also last year effort is also to a greater extent to that only, and they said for domestic transactions, of course, this is a transfer pricing provisions, arm length concept, arm length price concept, these are all being given for transactions exceeding 5 crores. Other way around it is very difficult because so much of the procedure is there. Anyhow, we will discuss it. You have to maintain certain documents in respect of such transactions, and then when the assessing officer feels like he can always refer the matter to the transfer pricing officer, like that procedure is there, and if you don't maintain proper accounts for such transactions, you will be penalized as a point. So now with this brief idea behind introduction of this particular section and application of the same to the specific domestic transactions, let us look into what it is. See, amendment is brought in section 40A2. In respect of specific domestic transaction, of course, what is specific domestic transaction is given in section 92 BA is the point. Disallowance on the basis of section 40A2 cannot be made if such transaction is at arm length price as is defined in section 92F. So now as a student, you are supposed to understand what is a specified domestic transaction which is given in section 92BA, and what is the definition for that arm length price which is given in section 92F. So your 40A2 is amended to say that what? That is, you cannot disallow by invoking 40A2 as long as that specific domestic transaction is carried out at arm length price. So you can invoke 40A2 in case if a specific domestic transaction is not carried out at arm length price. So that is the first point of learning. And then of course, earlier also I told one thing, that is any amendment in the law will be brought either to nullify the effect of a particular court judgment or in order to follow the direction given in a particular judgment. Of course, this is not for nullifying the court decision, that is Supreme Court in the case of CAT versus GlaxoSmith, what they said in its order has, after examining the complications which arises in cases where fair market value is to be assigned to the transactions between the domestic related parties, suggested that Ministry of Finance should consider appropriate provisions in law to make transfer pricing regulations applicable to such related party domestic transactions. See, earlier what is it? Simple concept. If it is a related party transaction, if it is not done at a fair market value, then you can invoke 40A2. But what is fair market value, how to look at it is not clearly laid down in the law. That made the Supreme Court to suggest to the Ministry of Finance that 40A2 is a super duper section, but you kindly make it that you prescribe a procedure by which you find out that unreasonable and excessive amounts. That's where they have brought the concept of arm length price. Again, they have already set in place in respect of international transactions which are not being done between the related parties at arm length price. They have brought this transfer pricing officer and all. Now the assessing officer, once he want to invoke 40A2 to the specific domestic transactions, naturally has to refer the matter to the transfer pricing officer. Thereby whatever the Supreme Court direction which is given to the stated in that particular decision automatically get heard. Then friends, thus based on the recommendation of the Apex Court, a new section of 92BA has been inserted in the Finance Act of 2012 to extend the transfer pricing provisions to the specific domestic transactions also. So as a student, you are supposed to first learn what is a specific domestic transaction. 92 a BA. So an expenditure will be treated as a specific domestic transaction if all the following conditions are met with. What are those conditions? Just have a look at. The conditions here is, first thing is, payment in respect of such expenditure has been or is to be made to a person referred to in section 40A2. First, to call a particular transaction as a specific domestic transaction, it must be a transaction that is involving payment to a related party. That is the first condition. Second condition is, aggregate amount of such expenditure in the previous year should be more than 5 crores. Third is, such a transaction is not an international transaction, because international transactions, already there are provisions to cut short the unreasonableness in those transactions. So specifically they want to bring similar provisions to the specific domestic transaction. So specific domestic transaction is not very difficult. Only thing that you have to understand is, specific domestic transaction is being defined in section 92BA, and when you call a transaction as a specific domestic transaction, number one, it must be carried out between related parties. Second thing is, the aggregate of the transactional value between the related parties must be more than 5 crores, and it must not be an international transaction. Then friends, this section provides for a disallowance of revenue expenditure incurred by the SSE. So this is not applicable to the capital receipt or capital expenditure or revenue receipt. It is only applicable to the revenue expenditure only. It is neither applicable to the capital receipt or revenue receipt or capital expenditure. It is only applicable to the revenue expenditure. Then friends, under this section, if any payment is made or to be made for any expenditure to any related person, the assessing officer can disallow that part of the expenditure which he considers excessive and unreasonable, having regard to its fair market value of the goods, services or facilities for which such payment is made and claimed as a deduction. Again, it must be an expenditure which you claimed it as expenditure against your taxable profits. So this section applies to the computation of income under two heads. One is income from business and profession, and second is the income from other sources. If the expenditure is coming in other heads of income, it is not to be invoked. So this section is now amended to provide that the fair market value for any payment to which the concept of specific domestic transaction apply shall be determined on the basis of arm length concept as provided in section 92C to 92F. So as a student, you should now be clear that in the examination, how the question is going to be set. They will ask you to write simply what is a specific domestic transaction, or the provisions of transfer pricing and their applicability to the specific domestic transactions. So if I look at 92C to 92F, what it is, like, try to understand, you have deductions 80IA, that is for specific undertakings, their profit will be allowed to be deducted to the tune of 100% and all. In the last session also we studied, for an undertaking established for generation and distribution of the power, a deduction to the tune of 100% of the profits for the 10 years is there. Now what kind of drama can happen with respect to the entities which are enjoying the deductions under section 80IA, and how the lawmaker wanted to cut short all such kind of dramas? First, understand the drama, then you can see how the lawmaker has cut short such kind of drama. See, the point here is 80IA6 refers to a transfer of any goods or services held for the purpose of undertaking, unit, enterprise or eligible business to any other business carried on by the SSE. So transaction is happening between what? An undertaking which has got eligibility for 80 IA6 and another business of the same SSE. So transaction is happening between the SSEs, one undertaking for which you have a deduction of 80 IA6 with another business of the SSE. It also refers to the transfer of goods or services held for the purpose of any other business of the SC to the undertaking or unit, enterprise or eligible business. So transfer from this undertaking to the other business or other undertaking to this particular other business to this particular undertaking. See, what will happen is, I have got two undertakings. One has got 80 IA6 eligibility, another don't have 80 IA6 eligibility. So when this particular undertaking whose profits are allowed to be deducted under 80 IA will make sale of the goods to the another undertaking at a price more than the market value. Thereby higher profits can be booked in an undertaking which enjoys this particular deduction. Because both are my own undertakings only. One is having 80 IA6 because it satisfies those conditions and it is engaged in the businesses prescribed under section 80 IA. So I am making a transfer of particular services or particular goods from the undertaking which is enjoying 80 IA to the another undertaking. When this transfer is made, it is a sale transaction or revenue generating transaction for the undertaking in 80 IA. Naturally, it will be done at a higher price, thereby higher profits can be booked and they can be claimed as a deduction. When it comes to the point of the expenditure part, let us suppose that other undertaking is rendering some services or supplying some goods. We will take that particular goods or services at a lesser price. So that what will happen? Cost will come down, profits will get inflated, those profits will be eligible for 80 IA deduction. And many people are doing that. So law want to prevent such kind of drama, and they said if the consideration for such transfer is not at the market value, then the assessing officer can substitute the market value of the goods or services for such a transfer. So the expression market value is defined in the explanation to mean the price that such goods or services would fetch if they were sold in the open market, subjected to the statutory or regulatory restrictions. Normally arm length price or fair market price, how you look at? That is, it is a price at which transaction happens between two non-related people and without any influence. That is what we call it as an arm length price. Or fair price means what? It is the price at which you are going to transact with an unrelated party. That is what we call it as a fair market value. So if you look at all this, what idea we get is, law don't want to give benefit of deductions but on profits which are created artificially. Artificial creation of profits is what? I am dealing with a related party and I am doing that transaction at a price more than the market price, or if it is an expenditure transaction, I am doing it at a lesser price. So once your assessing officer is able to understand your intention, he is given a particular power to invoke these provisions and put that particular transaction at the market value so that correct profits can be ascertained is a point. Then friends, the explanation is now amended with effect from assessment year 2013 and 14 to provide the expression market value in relation to the specific domestic transaction shall now mean in relation to any goods or services sold or supplied or acquired, the arm length price as defined in section 92F. So wherever in the law, earlier we used to say fair value, fair market value. Now we have brought there in the place of the fair market value, arm length price. Why? Because it is difficult to ascertain what is the fair market value. Whereas if you say arm length price, the assessing officer can always refer the matter to the transfer pricing officer, who is going to decide what is the arm length price. What is arm length price? Arm length. Normally, who will be the people within the arm length? Related people. So, it should be a transaction between non-related parties without any influence, exercising any influence. Then the next is, it may be noted that this section applies to the transfer of the goods or services from one undertaking or unit or a business owned by the SSE to another undertaking or unit or business owned by the same SSE. So in 80 IA6, what I am looking at is, if a particular SSE has got two undertakings or two businesses, and one business is eligible for 80 IA6 and another is not, then the transactions between those two undertakings must be keenly be looked from with a scanner, so that if there are any transactions, whether they are being carried out at arm length price or not, the assessing officer has to ascertain it. And if it is not done, he has to refer the matter to the transfer pricing officer and correctly bring the value to the arm length price, so that correct ascertainment of the profits happens. Correct deduction will be given under section 80 IA6. Then you have 80 IA8 and 80 IA10. There also, all this is what, wherever with a good objective and intention, government is giving any deduction or exemption, if people are trying to defeat the purposive intent of the law, these kind of amendments will come. See, hospital industry is being encouraged by the government and said, hospital, if you are starting a hospital of so and so strength, then the profits will be allowed as a deduction. Now what the people are doing? They have got a hospital in Hyderabad, they have got a hospital in a village. And all what the business that they have in the Hyderabad, on paper they will shift it to the village. So that what will happen? The profits derived by the hospital which is established in the village or taluk headquarters is entitled for a particular exemption or deduction. But the intention here is what? Only for the genuine transactions, genuine services that they have done in the village or taluk, that profits only the lawmaker wanted to give the exemption or deduction. But artificially you are creating a situation where a business which is otherwise not entitled for any exemption, you are claiming the exemption or the deduction. So lawmaker identified all such transactions and brought them into the purview of this particular arm length price concepts. Then you see here 80 IA8, this provision refers to the transfer of goods or services held for the purpose of eligible business to any other business of the SSE. See, in earlier situation, what is it? 80 IA6, what we said? From one undertaking of the SSE to the another undertaking of the SSE under the same business. Now 80 IA8 mein kya hai? From one eligible business to the another business which is not under the eligible category. So the section also refers to the transfer of goods or services from any other business of the SSE to the eligible business. So both ways, eligible business to the other business or other business to the eligible business. If any transfers are made, then the assessing officer need to necessarily check whether they are being carried out at arm length price or not as a point. Then you have, for this purpose, the expression eligible business means what? Business carried on by the industrial undertaking owned by the SSE, carrying on the business of infrastructure development, generation of the power, telecommunication services as listed in 80IA4, for which 100% deduction is given under section 80IA. So 80IA provides that transfer of the goods or services between eligible business or undertaking and other undertaking of the SSE shall be at market value. Now it is amended what? Wherever the market value is there, they have replaced the market value with what value? Arm length price. On whose direction? Supreme Court direction. This amendment is being brought. Then friends, 80IA10, similar provision. This section provides that where it appears to the assessing officer that owing to the close connection between the SC carrying on eligible business and any other person. Now here it is not the two businesses or two undertakings of the same SSE. It is one SSE has got a business which is eligible for 80IA deduction, and he has got a related person, he has got another undertaking which is not eligible for 80IA. So even such transactions also we are asking you to check, and in case if they are not being carried out at a, what is it, arm length price, invoke the arm length price concept. So this section provides that where it appears that assessing officer that owing to the close connection between the SSE carrying on the eligible business and any other person, in the course of the business between them is so arranged that profits of the eligible business for which 100% deduction is allowed under section 80IA is shown at a figure higher than the ordinary profits in such business, then the assessing officer can recompute the profits of the eligible business for deduction under section 80IA. So all this is aimed at what? All this is aimed at to see that nobody unduly gets enriched by claiming a particular deduction for which they are not eligible. Then friends, there are several other sections which got amended. So the section is now amended to provide that if the above arrangement between closely related parties involves specific domestic transaction, again not all small transactions, specific domestic transaction means what? A transaction whose aggregate value is exceeding 5 crores, then only you are asked to put the scanner. Now the assessing officer shall compute the profits of the eligible business having regard to the arm length price concept as defined in section 92F. So it may be noted that the provisions of section 80IA8, 80IA10 apply to certain other sections of the Income Tax Act also. These sections shall provide for deduction of income derived from various specified activities. So this concept and its implications will be on what? 80IA8 and IA10. So what is the other related amendments? Since the concept of arm length price is now extended to 80IA8 and 80IA10, this concept will apply to the transactions between the related parties while computing their income. So a similar provisions are being introduced even for deduction under 10AA. So you have a particular section called as 10AA which prescribes for deduction of the profits. There also all the provisions which we have given in 80IA, if a similar transactions are there, even for 10AA also this arm length price concept for specific domestic transactions will have a application. Even for 80IB and 80IAB and 80IC, 80ID, 80IE, I am not reading in toto, but please do remember wherever deduction is being prescribed in respect of the profits, and if those profits are artificially created by carrying the transaction at a price more than the arm length price, if it is a revenue transaction, if it is an expenditure transaction at a price less than the arm length price, then you please invoke the, what is it, your arm length price concept. So what is the effect of this particular arm length price concept? See, if arm length price comes into play, what should happen? What should happen? How to ascertain the arm length price? Of course, for the final students, we will be taking up the non-resident taxation, international transactions and all. There I'll explain in detail what is arm length price and what are the different methods. But for those intermediate students who don't have the non-resident taxation, friends, try to understand arm length price. There are 6 methods to ascertain the arm length price. So you have to go by that 6 methods even to find out what is the price at which these specific domestic transactions are to be carried out. That is one thing. Second thing is 92C says what? 92CA says what? Once this section provides that the reference by the assessing officer to the transfer pricing officer. So if the aggregate of that particular transactional value is exceeding 5 crores, then if the assessing officer gets a doubt that it is not being done at arm length price, then he has to refer the matter to the transfer pricing officer, is what you have to understand. Who said so? 92CA says so. Then we have 92D, which says you have to maintain certain, keep record of these transactions, and in case if you fail to maintain the records which are prescribed under 92D, then you will be penalized, is a point. Then of course you have to go to most sacred human being on the world, that is chartered accountant, and should obtain a report from him in form number 3CEB in respect of the specific domestic transactions. So tomorrow when you are doing the statutory audits, naturally you have to go through all, you should have this knowledge. It is not only income tax department which should put the scanner, even as an auditors, you please, when going through the audits of bigger companies, if they are enjoying the benefits of 80, IA, IB, 10 AA and all that, then if they have got any specific domestic transaction, kindly advise the client that as per the amended law, you have to maintain records for all such transactions, and all such transactions are to be carried out at arm length price only, failing of which there are penal provisions. So when we read, generally we feel that only when caught all these things will come, but when we are signing the audit reports, we are supposed to look at all the statutory obligations. What is a statutory audit? It is not an in-depth watching audit. You have to know what are all the statutory compliances, or what are all the statutory things which are applicable to that particular company, whether they are all being duly complied with or not. A responsibility is posed on the statutory auditor to check all those things. So even for that also this knowledge really makes a sense. So in case you are the auditor of a company which has got specific domestic transactions, you please see to that whether all those transactions are being done at arm length price or not, and whether they are maintaining proper documents and records in respect of that, and they have to also take a report from a chartered accountant that all these transactions are being well carried out at a arm length price. Then friends, that is what do you mean by arm length price? Who said so? 92F says so. So this term means a price which is applied or proposed to be applied in a transaction between a person other than associated enterprise in uncontrolled condition. So what is arm length price? First thing is, it is a price at which a transaction happens between two unrelated parties under uncontrolled conditions. Uncontrolled means there is no influence for the other person on us in deciding the price. See, at intermediate level, that is IPCC level, what will happen friends? They may ask a question on this, and what are the possible questions that I am expecting is, define arm length price, or the other type of questions is like, what is a specific domestic transaction. Then at the final level, they may ask what are the penal provisions and what are all the documents that they have to maintain. All those things can go for the final level, because ultimately when we study anything, what type of questions that may come in the exam is also equally important. But when they ask the definitions, friends, please remember, if you write generally the definition, you are not going to get the marks. So you have to necessarily pakka with those definitions. More particularly when some definition got introduced or inserted or amended, those definitions are bound to come for the intermediates. Then friends, that is about arm length price. And what do you mean by transaction? So this term includes arrangement, understanding or action in concert, whether or not it is a formal or in writing, or whether or not it is intended to be enforceable by the legal proceedings. How beautifully it is being framed. Yes. You have to learn the song like song only. If you sing a song just like how you read something, it won't appear like a song. So try to understand, although it is slightly difficult to remember the definition as a definition, again let me tell you, for us to read and understand and reproduce itself this much of the difficulty, think about the difficulty of a person who framed that particular definition. How beautifully it is being done, because the person who is supposed to write that knows that people are very intelligent and chartered accountants are there to help those intelligent people. That's why so carefully it is being drafted. Let me again read. What do you mean by transaction? That is, the term includes, it could be an arrangement, or it could be an understanding, or an action in concert. I think all of you know what is concert. Musical concerts, never you are there to any musical concerts. If you open the TV, you have got so many channels where music is coming. Music will be good to our ears when everything is being done properly and all musical instruments are being properly played. So singer and the musical instruments, once properly being carrying out that particular program, we call it as a concert. So the understanding or the arrangement or an action in concert, whether or not it is formal or in writing. Some people may say that we are not entered into a contract. Whether you enter into a contract or not, what you are doing involves contracts. Contract need not always be written contract, it could be a oral contract also. Whether or not it is intended to be enforceable by legal proceedings. That means, if tomorrow, if I am being caught, can I say that, no, this is just like that we have done, even if there is a failure in this particular arrangement or understanding, I can't go to a court of law and can suit a file against the other person. Even then, it is a transaction which gets attracted to your arm length price concepts. So these are the two definitions you have to keep in the mind. And then penalty, that is, what is the penalty? It is now provided that the penalty under that section will be leviable in respect of amount disallowed out of the above specific domestic transactions. So very beautiful. See, otherwise people will not listen. What is stated? By any chance, by invoking these provisions, if any expenditure gets disallowed, that means you are a fraud. So a fraud person need to be penalized. So the moment disallowance comes under this particular, by invoking these provisions, that SSEs are exposed to the penalties. So once law says like that, at least people will be double careful. Then the next issue is penalty at the rate of 2% of the amount can also be levied under section 271AA for not maintaining the records under section 92D. Just like that, if I request, nobody will adhere to my requests. So I am saying that you have to maintain the records, and if you don't maintain the records, I will penalize. At what value? At what rate? 2% of the value of the transaction. Then this similarly, a penalty can also be levied if you provide wrong information, incorrect information. There are two crimes. One is not maintaining, second is maintaining and providing wrong information. Which is more dangerous, dosto? Which is more dangerous? Second thing is more dangerous. As an auditors, please do remember, if any client of you don't have the record, you are at a comfortable position, because you can say that I have not seen that particular document. But in case if he maintains the records and provides wrong information, you are not catching hold of that, is definitely a bigger problem for you. So not maintaining, galat uske upar rehta. Not providing the proper information, our inability to check that definitely put us also into inconvenience. What I am trying to tell you is, for both these crimes, the Income Tax Act says that 2% of the penalty can be levied as a point. So you please make a note of what are all the important points with respect to the specific domestic transactions, which as a students you have to remember and rewrite in the exam. Write down specific domestic transactions. Specified domestic transaction. First, specified domestic transaction, a definition of specific domestic transaction. Write down section 92BA, section 92BA, capital BA, has been inserted by Finance Act of 2012, by Finance Act of 2012, to extend transfer pricing provisions to specific domestic transactions, to specific domestic transactions. Point number 2. An expenditure will be treated as a specific domestic transaction, if all the following conditions are met. If all the following conditions are met. Condition 1, side heading, condition 1. Payment in respect of such expenditure, has been or is to be made to a person, referred to in section 40A2. Condition number 2, aggregate amount of such expenditure in the previous year exceeds rupees 5 crores. In the previous year exceeds rupees 5 crores. Condition 3, such a transaction is not an international transaction. Such transaction is not an international transaction. Next, section 92BA. Next point, section 92BA provides for disallowance of revenue expenditure incurred by the SSE. Next, section 92BA does not apply to any revenue or capital receipts or to capital expenditure Section 92BA does not apply to any revenue expenditure which is to be capitalized. Lastly, section 92BA, so many times I am making you to write so that you remember. Section 92BA applies to the computation of income under the head profits and gains from business and profession, PGBP, and income from other sources. Then one more last, section 92BA prescribes that arm length price concept is to be used in respect of specified domestic transactions instead of fair market value.